but eventually they do. And one effect, of course, was the stock market crash of the fall of 1929. So this is just one of the threads you can follow to see how the war and the attempt to recreate the war-destroyed gold standard and the monetary policy all lead us up toward the onset of the Great Depression. I don't have time to tell all the stories that are similar to this, but there are a lot of others. Another thing that happened was a real estate boom, a construction boom. I've mentioned why that happened. That actually peaked about 1926, but when it started down, it didn't fall very rapidly. So that by 1929, construction activity in residential housing had only fallen about 15%. Now that's not to be sneezed at, that's substantial, but 15% is not the end of the world. Construction activity in commercial and industrial areas continued at a high level right up to the late 20s, and it didn't encounter its bust until 1929. A few of those projects are actually carried forward. One of the things you see is during boom times when monetary authorities are keeping interest rates artificially low, a lot of skyscrapers get built. That happened in this country in the 1920s. So people built the tallest buildings that had ever been built in this country, and they started the Empire State Building. And it wasn't finished when the bust came. They did go ahead and finish it in 1931, but for a long time, almost nobody wanted to rent space in it, and it just sat there losing money for over 10 years. So we had a construction boom, real estate boom. Real estate prices were driven up, especially in certain parts of the country, such as Florida. Florida had just an unbelievable boom in real estate, and that was finally washed away, literally, in 1926 by hurricane that came through the Miami area and destroyed a lot of the developments that had been built and some that were in the process of being built. And somehow it took the rose off people's desire to move to Florida for a while. And so the Florida bust happened very quickly. But the rest of the country didn't encounter its real estate bust quite so violently as Florida did, and hung on till 29. After 29, everything went to hell. There was virtually no real estate development to speak of for the next 10 years or more, actually until after World War II, because during the war you couldn't get the materials to build houses and apartments and so forth. That was all being used for military purposes. So we've got that development. We've got a bunch of financial gimmicks. Whenever you have easy money, malinvestments, construction booms, you always have financial gimmicks going along with it. And in the 20s we had things like real estate trusts that were cooked up by wheeler dealers. Easy money attracts the criminal type. So if you ever feel the need to attract the criminal type, what you want to do is urge the Fed to lower interest rates. That'll do it every time. So some of these were not on the up and up. Some of them were. They just didn't work out. They weren't frauds. They just were bad ideas for the time. There were also holding companies that were created, and holding companies for holding companies. And I think there were even holding companies for holding companies that were holding companies. So this pyramiding of holding companies involved a whole bunch of companies. Only the one on the bottom owned any brick and mortar, or any machines. The ones on top only owned shares in companies. Now you say, why would anybody want to do that? And the answer is because by pyramiding ownership claims like that, you would eventually be able, by owning shares in the topmost company, to control a huge volume of money at the lower levels. And that meant that with a relatively small investment, you could get a gigantic return. The leverage is the key to paradise. Just ask anybody who's worked in Wall Street the last 2 years. Leverage, that's what everybody was trying to get between 2001 and 2006. Borrow money is cheap. We can all become billionaires. Right? Because we had new financial gimmicks this time, not holding companies or real estate trusts, but similar things. So let's back up and say what happened recently in these regards. Easy money, The Fed kept the interest rates very low between 2002 and 2005, extraordinarily low, especially if you adjust for inflation. They were almost zero. Even for things like mortgages, they were extremely low, corrected for inflation. And so, of course, a lot of real estate developments got started, and real estate prices got extremely high, especially in California and Florida and Nevada and Arizona and places that were already attractive to developers. So we got a real estate boom, construction boom in the early part of this century, and we got these financial gimmicks again. This time we got a whole bunch of mortgage-related derivatives, securities. There's securities that promise to pay some stream of income to people at a certain date, but they in turn got their incomes from the payments people made on mortgages when they bought homes. And again, these were pyramided, so that some people bought derivatives which were derivatives of derivatives. And again, why do you do this? Leverage. Leverage. A tiny amount of investment can get you a gigantic payoff. Only one thing has to happen. House prices have to rise forever. That's the one little fly in the ointment here. And for some reason, people in the early part of this century brought themselves to believe that house prices would increase forever. Now, if they had had any knowledge of history, they would have had trouble believing that, because house prices have gone through cycles for well over a century. It's one of the best documented cycles in all of economic history, is the real estate cycle. Prices go up and down, you know. You can always expect them to go down sooner or later. And this time it was sooner. And you see, once those house prices begin to fall, a lot of people find that they can't do what they thought, which was refinance their mortgage on good terms when the adjustable rate adjusts, or you know, when something else happens to make it hard for them to make their payments, and mortgage delinquencies start to rise, and pretty soon defaults are rising, and that's the whole source of nutrition for this mountain of derivatives. If people aren't paying in at the bottom, there's nothing to bulk up values at higher levels of this pyramid. And that pyramid started to crumble quite quickly toward the end of 2007, and then just fell utterly apart by the end of 2008. Not just here, by the way, but all over the world. And when that happened, all this money that had been pouring into the purchase of these derivative securities and being channeled into real estate purchases and encouraging developers meant that developments were seen to be no longer good bets. I found myself, strange to say, last spring on the southwest coast of Turkey. And that was odd. I've never been there in my life, but there I was. And of course, being an economist, I took note of certain things other than the usual touristy stuff. And one of the things I saw at one point driving along, actually riding the bus along, was one place where beautiful coastline, the Aegean Sea, just gorgeous there. I mean, magnificent place. If you ever have a chance to visit, I recommend it. But developers had come in there in the last few years and started building high-rise condos. These condos probably around 14, 16 stories each. And they had built, they must have built over 100 of these things. It just went on and on and on. But as I drove along last spring, in the wake of the financial debacle, what I saw was that almost all of them were standing there unfinished with no work going on. They've been abandoned. Their investors have given up on them. A few of them had a few tenants in the lower floors, and then all the upper floors unfinished, unoccupied. And I saw right before my eyes living proof of the Austrian theory of the business cycle. I said, here it is. Voila! I found this, the proof that Austrians have been seeking all these years, right here in Turkey. Bad real estate developments by the jillions, standing there, half-finished, abandoned. Now, at the time somebody started those, probably in 2003, 4, 5, when they started gathering their investment money, that looked like a great deal. The world was getting rich. Everybody was making lots of money from investing in derivative securities, and stocks were rising, and life was lovely. So a lot of people were thinking, yeah, I'd like to have a condo on the Turkish coast. That'd be droll. And the investors were thinking, yeah, we'll take advantage of this.